Yo, what's up, guys? Welcome to another video that I'm going to be uploading here. I'm going to try to just kind of base this right after my first video that I posted about just what are the basics of candlesticks and, what they represent. Sorry. And just like support and resistance levels that I was kind of talking about in my previous video. What I'm going to do is I'm going to look at the 5-minute chart here, which again, you're going to see me use a lot. One of the things that you're going to have to learn on your own, essentially, I know it kind of sucks, but it's just what you got to do. You have to figure out what kind of trader that you are and what kind of trader that you want to be. So, for example, when I first started trading stocks, I was what was called a swing trader. And that, for example, if I were to go to my interval here, my time frames, and if I were to go to the daily chart, the D. D is for daily, W weekly, M monthly, Q is quarterly, and Y is yearly. And then once you get down to the 4H, 4 hour, 2 hour, 1 hour, etc., 30 minutes, etc. I personally have found that I am a scalper now, but I'll get there. Originally, I was a swing trader. So something that I would do is I would go to the daily chart. So now each one of these candles represents one whole day. If you can see down here, you see March, each one of these represents one whole day. And something that I used to do when I first started is I would trade penny stocks, stocks that were, literally, 50 cents a share, $1 a share. Nothing like an Apple, nothing, no huge company that you've ever heard of, just a shitty company essentially. And what I would do is I would look at the daily chart like this, and I would try to identify support and resistance. That's something you're going to hear me look for a lot, is support and resistance levels. So by doing that, we can go to a daily chart, and I'll go to drawings, horizontal line, and I will simply just look for support and resistance levels over the past, I would say usually about a month. I usually go about a month out, but I look for key levels. So I can see that there's a gap here, and the more comfortable with trading you'll get, the more comfortable you'll get with noticing patterns and certain shit that happens. This right here, for example, is called a gap, and in this case, a gap up. And the easiest way to explain this is you can see that there's a gap right here in price. You can see how these candles are right next to each other. But these two, there's a gap. And why is that? Essentially, that just means that something happened overnight over the course of 8 p.m. The market officially closes for everybody at 8 p.m. Again, I don't want to get deep into too many details. I don't want to confuse anybody. But essentially, overnight, the price, as we learned before from a candlestick, the price closed right here. It went all the way up to here at the highest, but closed right here. And the very next day, the price opened up here, creating this gap. And that could be good news. That could be, for example, you can see there's a gap down here and here. Price closed here, and the next day, instead of the price opening up somewhere around here, price opened up all the way down here. It doesn't look like a lot, but gaps are very, very important, and we will get to that, in a later video. But I will look at this, and I would say, okay, well, where's a good support level right here? At first glance, if I'm just looking at the past month, so as I can see this right here, this big green candlestick right here is February the 3rd, a little more than a month away. But, let's look back to the date. I can see clearly a big, big bounce spot is right here. I can see price at this level, it goes, and it bounces right here, indicating this is a really big bounce level. I would look for an area of resistance. I would probably say right around this level here. Price does go above it a couple times. As you can see, price goes above it here. In this scenario, it wicks above and comes back down. The same thing here. It wicks above and comes back down. But generally, and you could probably even move this up a little bit. This is just the lowest it's been the past couple of days, but you could probably, I would probably put this up to around this level here, because I can see that before this was a resistance level. I can see that price had trouble getting past this level, getting past this line right here. And then what we gapped up to this next level here, this would be the next major, resistance level that I would see. I could see price has trouble getting past this level here. And it comes back down. And yes, price does fall below right here. But we can see that it quickly, the very next day, regains this price. This previous resistance level has now turned into a support level. It came back down, but very quickly, buyers stepped in and brought it back near this level. And this former resistance is now a support level. And where does price go? Price bounces from this area here. We get a big gap right here, a gap up, big green candle here. And 2 days in a row, we get another big gap up right here. And we see it hits this resistance level again. And like I said, it does wick up here. What I'm going to do is I'm going to draw a rectangle, and I could see that usually anywhere from this area here would probably be a good opportunity to short the stock, short Apple, which means that you would look for the stock to go down. You would want the stock to go down in order for you to make money. If you short something, you want the price to go down. If you are long on a stock, you would expect the price and want the price to go up. Long, up, short, down. So I can see in this area, if price ever gets in this area, I would use that as a safe bet that the price will probably go down. There's nothing that is certain. There's nothing that will ever be 100%. There will never be anything that always works. Otherwise, everybody would be doing it. All you can do is try to find patterns and a system that works for you, that you're comfortable with, and creating the right risk management. So in this example, if you wanted to short this Apple stock, if you saw that it got into this red zone like it did here a little bit, here a little bit, here, it looks like you could use this area to short the stock and think that it's going to go down. And you could, if you wanted to, you could use this price above here, this highest wick, as a stop loss. Me personally, I would be a little bit more conservative, and I would probably use this area here, because I see price goes up to here, comes down. Price goes up to here again and comes down. I would use this as my stop loss. If price went above this level, I would be out because my thesis would be wrong. So what you could do is you could use this resistance level. And if price gets in here, okay, well, let me short the market. And your price target, the price target, it could be this level down here. Or if you don't want to plan a trade that far out, you can go on a smaller time frame, because these are this is a daily time frame. Each one of these are a daily candle. You could go to a 4-hour. You could go to a 1-hour chart, depending on what you want to trade. You're going to get more candles, but as you can see, this couple hours here, you could have shorted the stock and it went down. And yeah, eventually it did go back down to this support level, but it took a couple days. So you want to figure out what kind of trader you are. And if you're a short-term trader, are you a scalper? Are you trying to get in and out within 30 minutes? Do you want to hold for a couple of days? Are you a swing trader? Do you want to get in at this price up here on, what is this, March the 6th? And do you plan on holding it until it hits your price target, down here or you don't want to aim for home runs. You don't want to aim for a really big trade. You want to aim to scale in and out. So something that I would personally do, is if I were to enter short on a trade like up here or anywhere in the zone up here, I would look for the next support level on a smaller time frame because I personally like to get in and out quickly. So if I were just to look at the 1 hour chart, I could see, okay, price gets in this range here, and again here a little bit, and again here. So you could use any of these, any of these points to go short if you wanted to. Again, using this top area as a stop loss to get out of the trade to protect yourself. But what I would do is I would look for here and I would look for the next areas of support. A major area for me is right here. I can see right here price goes up and price goes down to here, and then we start getting a nice little bounce up. I can see that it's support here and it gets knifed through. Support breaks, and whenever a previous support breaks, not good. It's good if you think the price is going to keep going down. That's a pretty good indication that price will keep going down. As we can see here, the price goes below this previous support level that we see here. It was resistance right here, turned into support, which is good for a bounce, which we saw, into this resistance zone again from previous time frames, bounced back down to the support level, and it's kind of, going up and down here. And then we get a retest of that level, and this former area of support is now a resistance level, indicating a further downside move, which we do see on this day here. So I think I'm going to kind of end it there. Again, I don't want to get into anything too crazy, anything too detailed, but I kind of want to show you support and resistance levels and why looking at a chart and using candlesticks and going through different time frames like this can be so important. I like to look at a daily time frame, daily candlesticks, and work my way down into a 5-minute chart. And that's personally how I trade. Everybody is different. Everyone is going to have their own style. But this is what I do. I will usually at night, I will look at a couple stocks that I have an interest in, and I will map out major support and resistance levels. And from there, I will slowly work my way down into time frames. Because I like to be in and out of trades quickly, so I will usually look at a 5-minute chart. But I can use these daily support and resistance levels on my 5-minute chart, and I can use those as my scalping targets. So I think I'm gonna end it there. Again, thank you for watching. I don't want to get into anything too crazy. I just kind of want to go over basic support and resistance levels and just kind of give you an idea of what I'm looking for when I trade and how I can use, these little horizontal lines on different time frames to help me trade. So, thank you for watching. Peace out, boys.